Hello and welcome to Martyn Lucas Investor. My name is Sensei, and I will be presenting to you the CPI data today. And also later on today, we'll be diving into the Bank of Japan rate hike. We'll be covering the decision very late at night. We'll have also the full breakdown before it happens, as in a form of a cheat sheet in the newsletter. If you haven't got the newsletter, first link in the description, it's 25% off for this event. But thank you everyone for tuning in. Let's get straight into the information about CPI. Let's answer all your questions ahead of tonight's Bank of Japan interest rate hike. Very, very confident to say that they will be hiking rates today. And I'm very confident to say that that will have some effects, some lasting effects on the market, whether it's this week or in the future. It is a great concern, and it's not going to save XRP, and it's not going to take XRP to $100 or $1,000. So please stop thinking that. Let's go to our newsletter today. Most of it is premium only today. So only premium members have got the newsletter today. Only premium members will get the Bank of Japan cheat sheet today as well. Thursday, the 18th of December. Let's look at our top story today. Coinbase pivots into an everything exchange, adding 24/5 stock trading and prediction markets to counter crypto volatility. So what we've got here is Coinbase's big announcement yesterday, which was that they're adding a few things. One is prediction markets, and one is a stock market exchange on the Coinbase app. Would I personally be using it? Not for now, until it gets a bit better and I see how it all goes. But it's interesting to see. It's only 24/5. I'm pretty sure Robinhood does the same with most of its stocks now anyway. So we want to see the tokenization of stocks, and we want to see this be 24/7. We want to see the fees low, and then it turns into a really great product. That's Coinbase. We've got Micron reignites the AI trade with revenue forecasts beating estimates, lifting chipmaker after calming AI bubble fears. It's one of our top gainers today, and it's a very large market cap stock. It's over $100 billion in market cap, and it's up over 10% after its beat on earnings. So a major move up for Micron, and again, it's an AI company, so it has reignited the forecast for AI companies. There has been a real concern about valuations for AI companies, but we are getting now data from Micron, a big AI player, that they're expecting their forecast to go up. JP Morgan warns of extreme crowding as speculative favorites hit 99th percentile positioning, raising sharp unwind risks. We've got JP Morgan now warning of extreme leverage, extreme positioning in risky assets, and raising that flag about we could have a sharp unwinding. Now, you put that together with a Japan unwind, where people are forced to be liquidated or forced to buy back the Japanese yen, and causes cascading liquidation effect because the Japanese rates are going up and because of their currency situation, and then mix it with an AI bubble, and then put on top of that people who are investing in high risk stocks that require an unwinding. You've got a major financial um situation going on. I wouldn't say it's as big as 2008 or the dot-com situation, but certainly gives way to a potential 20-30% correction in the stock market. Again, many ways to be able to trade this. Most people would be better off staying invested and just buying the dips or buying as their paychecks come in. More seasoned investors, let's say, who have experience and don't mind taking on the extra risk, will be looking at their positions and potentially increasing their bond positions, getting like what Martin's doing recently, and getting ready for a potential unwind with the Japanese situation, or an unwind in regards to the overvaluation of the S&P 500, the over allocation of high risk assets for investors. There does seem to be something brewing out there, but it's very hard to say when it will pop or if it will pop. And you always have to be hedged your position. You don't want to be all in, and you don't want to be all out. They both come with their major risks. But anyway, let's continue again. I want to make sure I'm not a financial advisor. I'm not your financial advisor. Please do not buy or sell based on anything I say. That would be very unwise. We're 42 minutes away from CPI data coming in. This is going to be a very volatile CPI data. release. Why? Because we're getting multiple months release at the same time. We got jobs data last a couple of days ago. It didn't tell us too much. Yes, we went up 0.1% in unemployment, but the other figures actually um, weren't that bad. Spending up, so it didn't look like the Fed had to cut rates because of that unemployment ticking up 0.1%. It wasn't really a major concern at all. But what would be good is inflation to be really down today, and that will give them the reason to cut because they don't need to worry about inflation anymore. The only reason they're not cutting is because they don't really need to, and also inflation is does seem to be a little bit sticky. So if inflation is going to be sticky and they don't really need to control the unemployment market, then they won't cut rates, and that's what they're forecasting. They're forecasting inflation to be a little bit sticky but come down. They're forecasting unemployment to not be too worrying in 2026, and that's why they're forecasting only one rate cut in 2026. The market doesn't want one rate cut. If we only get one rate cut, I doubt we're going to be in the same situation in the stock market as we are today in a year's time. So I'd expect the stock market to be lower if we only have one rate cut. And also, if we do get more rate cuts, that's when I expect the market to go up a bit more. So how do we get more rate cuts? Well, it starts with today. In 41 minutes, we hope to see CPI down. Gives them a reason to cut rates and not worry about inflation. So whatever CPI. So I'm just reading a comment from the live chat. Let me go over here. I don't want to leave anyone behind. No question is not worth answering. So CPI data will come. It will crash anyway because Bank of Japan hike will happen tonight. No, I don't want you to be mistaken that we have to crash tonight. We will discuss it more later on that specific Bank of Japan carry trade live stream that's coming up later. It's already scheduled, so you can always go over there and leave a comment and hit the notification bell so you get notified of it. If you haven't already, please do subscribe and hit that notification bell when you do subscribe, so that you get notified of tonight's event. It's at a bit of an unconventional time, so you definitely want to be in that stream. So it will crash anyway. We don't know that. No one knows if it's going to crash anyway. What we have priced in is essentially the fact that we are having a hike, so that within itself won't crash the markets. However, there's underlying. It's more about what he says. Is if he comes out and gives us a forecast that they're going to be raising rates steadily to 2%, that's when the markets will crash 20, 30%. That's what we need to look out for, and that's what we need to get ready for. But just within itself, I'm not coming out here and saying tomorrow we're going to crash. I don't know. I don't think we. If I had to give a guess, I don't think we will crash. I think we'll be lower. I don't think we will crash. I'm a little bit bearish going into this, but I'm not super. I don't think the full unwind will happen today, but we need to get prepared for it because the unwinding is happening. Anyway, we'll come on to that more later. I just want to make clear that just because we could get a pump of CPI today if inflation's down, it will get washed away with tonight's carry trade. That's not correct. We don't know that. We can have our opinions, we can give our predictions, but fundamentally that won't be the case. We don't know if that's going to be the case. We don't know that tonight is going to cause a crash. We can't take away. You can't draw that conclusion yet. Next on the news, we have the Fed softens its stance on crypto, clearing banks to explore custody, payments, and stablecoins under new guidance. Very interesting here again. We'll be covering this more in our XRP weekly newsletter, which comes with this newsletter. If you subscribe to newsletter, let me give you a link. There is a free plan as well, and you do get most of the XRP weekly on the free plan. Let me give you the newsletter link. But yeah, the Fed is softening its stance on crypto. Very, very interesting. There is obviously the full story here. We'll dive into it in a second. We've also got the midterm elections coming up, and the banks hate crypto. The banks absolutely are hating crypto right now. They are putting in hundreds of millions of dollars to campaign for those people that are anti-crypto, pro-banks. So we will see more about that coming up in the midterm elections. The banks are very worried about crypto companies having the same rights as them. But we'll cover that more as the weeks go on and as we come close to that midterm. But what we've seen already is hundreds of millions of dollars pouring in to candidates that are anti-crypto, pro-banks. Japanese. Okay, here's another story. Japanese savers rotate into government bonds as higher yields finally push call out of long dormant bank deposits. So we are seeing a buy up of bank government bonds by um, Japanese savers. We are seeing the 10-year yield at 20-year highs. So literally the highest rate in 20 years right now, nearly 2%. That was 0% just a few years ago. And later, we have the deep dive coming out, a Bank of Japan rate cut cheat sheet outlining scenarios, market reactions, and key yen risk levels. We'll have 5 charts in there: XRP, Bitcoin, silver, gold, the S&P 500. There might be another one or two, but all those charts with my thoughts are going to be in that newsletter, my full analysis. It's not your typical cheat sheet like we saw with the FOMC last week, because it's much harder to we're very accustomed to what Jerome Powell says, and we know how the markets react, and we know how we can quickly analyze a statement, and we know exactly what words will trigger what. However, this is in Japanese. The actual press conference and the speech will be in Japanese. They have a different way of doing things. They don't have a set time where the interest rate decision will come out. They actually debate it beforehand and then they come out with it. So it's more of an information based cheat sheet where you get to understand exactly all the mechanics behind the carry trade. But yeah, that will be coming out later. So the one big thing today is all about CPI coming out in 36 minutes. Second half of today, we're going to start focusing on the Bank of Japan and the carry trade. Yes, we just got Stu in the live chat saying Bank of England cut rates to 3.75%. Yes, they did. And why did they do that? Well, 2 days ago they got unemployment at multi-year highs, 5.1%. A couple of days later they had inflation down, and what that meant was they're going to cut interest rates, and they did. So we're hoping for the same formula playing out in the US markets. Unemployment ticked up slightly, not too concerning at all. What we really need is inflation to come down more than the forecast suggests. That will allow the Federal Reserve to cut interest rates in January. So the one big thing today in the newsletter is the 3% inflation watershed. If you have just tuned in, please take one moment to hit that like button. It takes a second, really do appreciate it. And also make sure you have subscribed. There we go. I'll wait for you to do it. I know some of you haven't done it yet. If you haven't done it yet, it's free. Just take a second to do it. Hit that like button. Subscribe. I'll wait another 5 seconds. 1, 2, 3, 4, 5. Thank you, guys. I know some of you still haven't done it, so do make sure you have done it. The one big thing today is the 3% inflation watershed. Today's November CPI release serves as a financial arbiter for the Federal Reserve's January interest rate decision. While a government shutdown erased month-over-month transparency, the annual headline figure is expected to hit 3.1%. We are expected to actually go up. CPI is expected to go up this month, signaling that disinflation has stalled above central bank's target. Remember, what's the target? 2%. What does the Fed want to see? They don't want to see 2% today. I mean, that would be nice. But what they want to see is, or what they want to see is a path down to 2%. If we're going to stay sticky around 2.9%, 3%, 3.1% for a prolonged amount of time, that path is no longer down to 2%. It's a path that's stagnated at 3%. So that's the whole point. It's not to see interest rates at 2%, inflation at 2%, so they can cut interest rates. They want to see inflation heading down to 2%, so they can cut interest rates. If it's heading down faster, they can cut interest rates faster. So while a government shutdown erased month-over-month transparency, we're no longer going to get that month-over-month number, so we don't actually know what's happening. We've got year-over-year now. The annual headline figure is expected to hit 3.1%. We don't have a month-on-month figure, signaling that disinflation has stalled above central bank's target. If I go over to here, let me refresh the economic calendar, because we normally get the information hit like 20 seconds before Bloomberg report on it here. And this is what we're looking at in 34 minutes time. CPI year on year, CPI core November, CPI year on year, excluding food and energy. So that's not core. That's just excluding food and energy. What else do we have? Let me just check that for a second. Oh no, that one will be the core one. That's the core figure, excluding food and energy. The CPI year on year won't be the core number. We've also got some jobs data coming out today as well. So we've got initial jobless claims. So we can have a perfect storm today, or we can have a really bad situation. There's two extremes. If you look behind my head right now, initial jobless claims. That's how many people are losing their jobs. The more people lose their jobs, the more likely it is the Fed needs to cut rates because they don't want to go into a recession. So what do we expect? If more people lose it, so if we get 300,000, we get something like 300,000, 350,000 people who lost their jobs. That's more than forecast. And if we get inflation, instead of being 3%, we get it at 2.8%. You've got the perfect storm. Lots of people losing jobs. And again, I'm not pro people losing jobs. I'm just telling you what will be good for the market to an extent. We don't want a recession, but we do. The perfect storm for the market is people losing jobs, so that because that means Fed will cut rates, and inflation going down because that allows Fed to cut rates. So if we have initial jobs at 300,000 and we have inflation at 2.8%, that's a guaranteed rate cut in my books. But also not an emergency rate cut. They'll have to cut rates fairly quickly, but they don't have to come out as an emergency and cut rates, because if we have an emergency rate cut, that's the market panicking. So let me just tell you about these figures. So we've got 225,000 is the forecast, the consensus for initial jobless claims. We want a higher number. That means that more liquidity will be injected in with rate cuts. Continuing claims going up will be the same sort of situation. But the main big figures we're getting today is year-on-year CPI core, year-on-year CPI. One is excluding food and energy, one isn't. Essentially, we want to see both of them below 3%. We want to see them below 2.9%. If they're at 3.1% and 3%, that's what the market's priced in, and then the market will look at the other data. If it's above, if it's at 3.1% and 3.2%, or 3.2% and 3.3%, the market will crash, in my opinion. Again, there's always little bits that might affect that, but my prediction would be the market will crash quite a lot, actually. Not 10%, 20%, but it would come down. The S&P 500 could be down a couple percent by the end of the day, and that could mean the crypto market's down 10, 20% by the end of the day. If we get something like 3.3%, 3.4%, or 3.2%, 3.3%, because inflation will have changed trajectories. Not only is it sticky, it's going up. That means the Federal Reserve won't cut rates, and they don't have to cut rates because the unemployment numbers aren't too bad. So these are the numbers we're looking for that are coming up in 30 minutes. We'll reiterate that before that comes out, but let's go back to our morning newsletter. If you have just tuned in, go and consider getting out, get today's newsletter, because today's newsletter will include everything you need to know for the Bank of Japan interest rate hike. It's also 25% off today, so go and check it out. Oh, there it is. So what time London time will the news from Japan be delivered? It's a rolling scale. Why is it a rolling scale? Well, because they do things a bit differently in Japan. The actual time of release is around 2:30 a.m. London time. Around 2:30 a.m. London time, but we'll have the build up to it way before that. We'll see what the market. We'll get more information coming out of Japan beforehand as well, giving us an indication. So we'll be covering that maybe 5 hours before then. So 10 p.m. UK time, I might go live after Martyn's closing bell. So just keep an eye on the channel, keep an eye on the newsletter, because the newsletter will give you all that information as well. If you're not going to be awake at that time, at least you can have yourself positioned correctly. The newsletter will give you a lot of information about what is likely to occur, what to look out for, how to be ready for it. All of these are the 5 charts, having the limit order set up for buys, etc., etc. Fresh Felix, no worry. Feshlix, hi fam, have a good one, says Daddy Pascal. Brian says good morning. I'll go into the live chat in a second. I want to answer everyone's questions. But yeah, 28 minutes time, we're getting live November CPI data. If you have just tuned in, please do hit that like button and subscribe. It takes 1 second and it's free. This creates a high stakes pivot point for investors. A print below 3%, we're talking about CPI here, validates the current easing cycle. We get below 3%, we get 2.9%, it's good. We should have rate cuts. While any figure above 3.3%, if we get any of the figures, whether it's core or non-core CPI year on year, above 3.3%, will likely force policy pause through 2026. We might not even get a single rate cut in 2026. And depending on who the Fed chair is who comes in on, remember, a lot of people are saying it doesn't matter if the Fed are forecasting one rate cut in 2026. New Fed chairman coming in May, Jerome Powell's going out, and we're going to cut rates like crazy. That's not the case. That's very hard to do. Why? Well, because there's how many people? 11 people on the board, and it needs to be the majority vote. So having one extra person that wants to cut rates isn't going to move the needle. What that person needs to do is somehow convince every other board member to also agree with his policy, which is very hard to do. So don't count on that being the reason why the markets will pump, because there's going to be a new Fed chair and they're going to cut rates. That's wishful thinking to an extent. So even if with a new Fed chair, if we get inflation going up, the board is not going to agree to cut rates because that rates need to be higher to control inflation. So the only way we're going to get rate cuts, whether it's Jerome Powell or Hessett or Fed Waller, whoever the next Fed chair is, plus the first half of the year with Jerome Powell, we want to. They need to see the data, and the data needs to be showing inflation going towards 2% and unemployment slightly ticking up, but not going too crazy. So, essentially, let me boil it back down to what it means. I just wanted to bust that myth about a new Fed chair is going to cut rates no matter what. He doesn't have the authority to cut rates. He's just one vote. This creates a high stakes pivot point for investors. A print below 3% validates the current easing cycle. But below 3%, we're good. Market will pump a little bit. If it's at 3%, not much difference. Below 3%, the lower the number, the better. The market will pump more. While any figure above 3.3%, if we're on the other side of it, if we're above 3.3%, forget about rate cuts. We probably won't see any if we start trending up. That's awful. With the labour market softening and equities markets at record highs, the data will determine if the Fed prioritizes supporting growth or fighting resilient service sector costs. Investors effectively trading on whether inflation remains sticky or resumes its path towards 2%. Are we going to get sticky inflation? Are we going to get inflation ticking towards the upside? Or are we going to resume a path towards 2%? If it's sticky, we won't see much change in today's prices. If it's higher, we will get a dump in the markets. If we're resuming our path towards 2% and accelerating that path down towards 2%, it opens the doors for rate cuts. It opens the door for the stock market to continue its rally. Let's see what CPI is going to be. That's in 25 minutes. We've got the stock market fearful. We've got the cryptocurrency market in extreme fear. That's how we're heading into this. We've also got jobs data coming out. So the number that matters now, thank you for subscribing to the channel, Options Trading with Patience. Oh, I love it. Options Trading with Patience. You have to have patience when you're options trading. Can't be emotional when an options trader. 225,000 is the number that matters. Why is that the number that matters? Well, economists forecast 225,000 initial jobs claims for today's release. So we're actually getting jobs data today as well. It's not the most important jobs data. It's not the unemployment rate, for example, but it's our weekly initial jobless claims. It's forecasted to be 225,000. That's what the market's priced in. A figure higher than 225,000 would indicate that the labour market is cooling, increasing the likelihood of a Fed rate cut. So what we want is inflation down, unemployment slightly up. Why would the Fed cut rates if labour market's cooling? Well, the Fed cuts rates to support employment. Conversely, a lower result suggests resilience, reducing the probability of immediate easing. Worst case scenario today would be a low initial jobless claim, 100,000, and a high CPI number, 3.3%. Then we're going into this carry trade already unwinding leverage positions in the UK. Winners and losers. Micron Technology made it into the list, and and you don't normally see a company that big make it into the list. Had to double look at that when I was doing this section. I had to do a double take because I've got a specific indicator of companies of 100 billion and above. Normally they don't make it into the winners and losers list, but this time this jumped out at me. 11% up. Micron Technology shares surged after reporting record first quarter revenue and a net income driven by robust AI related memory demand. If we have a quick look at that chart, it is keeping up the AI industry. It's Micron Technology. The official market cap is 253 billion. It's a monster of a company. Oh my god, I've just seen where we took a trade on this, and we bought this at $64. We bought it on the outwards trend. That's incredible. Oh, we've got a special guest on the show. Let's listen to this.
Adbrianda Lisandio donated £1.99 through a super chat. Keep the coffee flowing tonight, Sensei. Me too.
We're going to need to keep the coffee flowing, and thankfully, me and you have got the merch mugs. I know you've got a great collection of mugs, Brian. Yeah, so let's keep the coffee flowing tonight. Um, oh, Paul D, you've just got your 6-month badge. Congratulations. Good morning, Sensei. Good morning, everyone. I had a hunch by Micro in the last couple of weeks, but I said no. PE ratio is way too high. What is the PE? PE is 30. Not awful. But wow, I've just looked at this chart. Whoever requested this chart, congratulations to you. I do remember looking at this chart now, and it was this upward slope we were looking at. We didn't buy at $157, but it came into that perfect support, and that trade was absolutely incredible. I mean, look at that risk reward. $64, it went down to $62. Where are we now? 100, and remember, yes, that's the initial take profit, but we ladder out of our take profit, so it'll be the next two levels, 130 and 230. $250. $250 Micron is at now. How far up is that since? That's up 301% in less than a year. This has got to be up there with one of our best trades of the year. I don't change these charts, by the way. This is just last time someone sent me a technical chart analysis for it. Who was it? Is it someone in the chat right now? Is someone watching right now who requested this chart request of Micron back in March of 2025? And all we did was we were bullish on it, upwards trend, horizontal trend, trade. Congratulations. If you have just tuned in, we're 20 minutes away from the CPI data release. We have just gone through all the fundamentals. If you do scroll, if you go back maybe 20 minutes, and then catch up, maybe go on 2x speed, you will see everything we covered. We're actually going to cover it again in about 5-10 minutes, just before the CPI data does get released. But now we're going on to a few different other bits of news, coming back to your live chat, and then going through the what we want to see from CPI, and then after that gets released, we'll talk about Bank of Japan, XRP, and the carry trade tonight. First thing I ask you to do is hit that like button, subscribe if you haven't got the newsletter yet. Please do hit that. Yeah, if you haven't got the newsletter yet, there's that 25% off. Please do hit that like button. Where is my button gone? There it is. There's Mr. Martyn Lucas rolling onto the screen. And then we've also got the subscribe button. Make sure your notifications are on for tonight's carry trade. So yeah, Micron Technologies up 11%. It's a monster of a company. Up that much is pretty incredible. We've also got Trump Media, which is probably one of the worst companies in the world. And that's not me going against Trump itself. It's me going against the balance sheet of this stock. Oh my god. This started at $180. It's at $10 now. It is up today, 21%. What's the news surrounding it? Well, Trump Media and Technology Group rallied after entering a definitive $6 billion merger agreement with a nuclear fusion company, Tay Technologies. Interesting stuff there. Those are some of the big movers today. Miller Knoll, we've got SanDisk Corporation. That moved higher in sympathy with Micron, and Morgan Stanley report highlighting supply tightness in the DRAM and the N markets. We've got SOC up 42%. Sable Offshore Corporation jumped following federal confirmation that Santa Ynez Penland pipeline in an interstate facility clearing a pathway for its restart. And we've got Canopy Growth continuing to go up 8% today in the pre-market, gaining after the announcement of 176 million acquisition of MTL Cannabis to bolster its medical cannabis market share and margins. Big losers today would be Mega Fortune Ltd. Shares crash following extreme technical reversal. And we've got INSM, that's Inschmed Incorporated, plummeted following phase 2B study failure and subsequent decontinuation of their brensocatib program for chronic rhinosinusitis. These healthcare companies, they're always on the top movers and losers. They are one of the most volatile asset classes out there. If you buy it as an ETF, not so much, but individually, approvals, disapprovals, SEC listings, phase 2 studies, investment, discontinuation. I mean, it's a crazy industry, the healthcare industry, and I think I don't know if I love it. Berkstead Stockholding PLC declined after its fiscal year 2026 revenue and margin guidance missed analyst expectations despite a 2025 earnings beat. Market snapshot. Let's get ready for CPI. That's in 17 minutes yet. You guys think gold will sink? if inflation's down, not I don't think so. I think gold is on its way to 4,000, 5,000. It's already at 4,000, isn't it? Oh god, it's already at 4,000. I just remember the days it was at 1,500 a few years ago. Yeah, it's at 4,000. Yeah, on its way to 4,700. That's the target for our gold trades. Let me tell you about JP Morgan sounding the alarm, because the Bank of Japan is about to sound the alarm as well. JP Morgan flags extreme crowding in speculative favorites. So what we've got here is JP Morgan's quantitative team just sounded a loud alarm on a handful of high flying stocks, warning that investors' positioning has hit in the 99th percentile. This extreme crowding signals means that capital is so concentrated in these names that there is almost no one left to buy, leaving the door wide open for a painful exit. Now, what's going to start that exit? Is it just inflation going to 3.3% today? Is it the carry trade unwinding it? Is it Bank of Japan's guidance going forward? Is it Nvidia's next earnings? Is it the fact that the stock market is the most or close to the most overvalued it's ever been since the dot-com era, or the most overvalued it's been since the dot-com era, but approaching the dot-com era very, very closely as well in terms of numbers? What is it going to be, or are we just, or the alternative is AI is just going to grow into that growth, and the profits from AI is just going to continue moving us up? We don't know. Be prepared for all situations, but today is a big day with Japan. So, it does leave the door open for a painful exit. That's why I'm starting the portfolio challenge very, very soon. That's going to be extremely exciting. But I'm probably going to start out in bonds, and then I'm probably not going to be looking at the Mag 7 or anything that's gone up too much. I'll probably be looking at the higher risk, higher reward companies that have been bashed, and that might, with the broadening of the S&P 500, might push money from these big AI companies into them. Anyway, that's what I'm going to be doing. I'm going to be doing that live on the show, and also it's going to be part of the newsletter. There's going to be so much research done. Firstly, starting with bonds, then going into companies that hold XRP's treasuries, because I want to buy a couple of them. Then it will be looking at undervalued stocks. Then I'll be looking at some of your requests. Premium members can do requests, and if I add them to my watch list, I will also do a whole newsletter deep dive on it. There'll be a whole section on the newsletter where you can go in, search for all the stocks that we've already done deep dives for. So that's going to be exciting. If you want to be part of that, then there's the newsletter. It's 25% off today because of the carry trade special report coming out later. So go and grab it. There's also a free plan. So this is JP Morgan sounding the alarm. We're also sounding the alarm slightly on this channel as well. The bank identified 6 specific names at risk. This is who JP Morgan says, be careful. Broadcom, AMD, Expedia, Estee Lauder, Invesco, and Nucor. The speed of this shift is what's really jarring. Positioning in these stocks moved from the 25th percentile into the 100th in just 3 months. The fastest acceleration JP Morgan has seen in 30 years. This matters because crowded trades are structurally fragile. We are in a fragile market right now. We are in an extremely fragile market. We're watching every single CPI data release because it's so important. The unemployment data, we need to watch everyone, because if we just go off track slightly, everyone's waiting for a crash. The first indication we have of fragility or something breaking in the market, everyone will sell. They'll ask questions later. So get ready for something like that, where something small might go wrong. I don't know, like we saw a couple months ago with a tiny regional bank defaulting on a loan. It was in the region of 1 to 100 million. So very, very small in the grand scheme of things. But everyone sold off the whole banking industry. The next day they bought it back because they realized it's not an issue. So what does that tell you? It tells you in a fragile market, as soon as something little goes wrong, everyone sells. They'll ask questions later. And if they sell and there's no good news behind the scenes, and there's nothing to hold it up, then they'll sell again, and you've got the cascading liquidations, you've got the carry trade unwinding, you've got overvaluation of the markets, you've got AI, which is not really proving its profits. Some companies investing too much into AI, that could lead to the next crash. Again, I'm not here saying a crash is 100% going to happen, because too many people have said that in the past, and we've continued going up. So that's why I like to be invested in the market, but having money on the side to capitalize this. And I think for most people, they should just still, if they've got long-term positions, they look at it as long-term positions and they just buy it if it goes lower, and always have an emergency fund so you don't have panic. You don't panic, um, or panic buy, panic sell, FOMO in, and always have an idea of what you would do. As I always say, with XRP, for example, I'm prepared for it to go to $10. I'm prepared for it to go to $5. I don't think that's very likely anymore in the short term future, but I'm prepared for it. So I'm 80% invested in case it does. I'm prepared for it to go sideways for years because I'll just buy in. I'm prepared for it to go down to $1.50. I'm prepared for it to go down to $1. I'm prepared for it to go down to $0.70, and I'm prepared for it to go to zero, even though I never think it's going to go to zero. It'll be a bad day in the market if XRP goes to zero, and it'll be a bad day in the market if XRP goes down to 70 cents. But I am prepared for it. I might not be happy about it, but I'm prepared for it, and that lets me not be emotional about my trades. If you have just tuned in, we're 11 minutes away from CPI data. We're going to come back on to CPI analysis in a second, the numbers we're watching for. We're going to come on to Bank of Japan and XRP in a second as well. That's tonight's coverage is mainly on that because we're going to get Bank of Japan's interest rate decision. The unwinding of the carry trade could start tonight. So please do hit that like button. Please do subscribe if you haven't done so already. I'll wait for you to hit that like button. I'm going to pause. Let's take a deep breath. Let's get ready for the CPI. But do hit that like button. I know some of you haven't done it yet. 50 says, Sensei, what platforms you recommend you trading on recommend in the UK? I'm actually going to do a whole analysis on the newsletter. I'm probably going to turn it into a video as well, because you're very right. That's the first question you should ask yourself. From my initial research, I've looked at about the top 10. So I'm talking Trading 212, Robinhood, that's just recently come. I've looked at Interactive Brokers, AJ Bell, Harvescrew Lansdowne. I've looked at Interactive Brokers. I've looked at AIG. The simplest and best, in my opinion, would be Trading 212. Is better than free trade in terms of fees. The runner-up might have been free trade, but actually what's a bit more complicated, but better fee-wise, depending if you're trading US or UK. US stocks is very cheap, and UK stocks is fairly cheap as well. You're looking at Interactive Brokers. Bit complicated for your typical investment, but in terms of fees, that one. Next best, probably Trading 212. Most people, Trading 212 would suffice. Anyway, I'll do a whole research piece on that in the next couple weeks, because that's the portfolio challenge will start on the 1st of January 2026. There it is. I released the date. If you want to see what I'll be doing, and not follow my trades, because I don't want anyone to follow my trades, but see my research, then that will be in the newsletter. So this is JP Morgan sounding the alarm. This matters because the crowded trades are structurally fragile. When everyone is on the same side of the boat, any minor bit of bad news can trigger a stampede for exits. That's the market we're in right now. A tiny bit of bad news, stampede of exits. Questions are asked: should we have exited? They might back in, but if they shouldn't have exited, if they should have exited, they will exit more, and that's when you get those cascading liquidations. Whether that's caused by the carry trade, whether that's caused by an AI company not living up to investors' expectations, too much money being invested, the S&P 500 being too overvalued, all this, that, and the other. There could be a reason. We're already seeing this play out with Broadcom, which recently, this is an example. Broadcom, or the banking crisis 2 months ago, wasn't really a crisis. It was a small regional bank defaulting on some loans, but the whole banking industry went down that day. The next day, it got bought back up because they sold first, asked questions later. But we also saw it with Broadcom this week, or last week, where it dropped 11% in a single day after hinting at slimmer margins, despite actually they beat on earnings, they beat on everything, but they put some more money into AI and they hinted of slightly slimmer margins. Market crashed 11%. It's a classic sign of complacency risk, where a market is priced in for perfect Goldilocks economy. That's what we're hoping for. Goldilocks economy. You'll start hearing that the more this goes on. While short interest with short interest collapsing in these names, there's aren't many natural buyers left to step in and provide a floor if sentiment continues to soar. There's not many shorts to cover. So if we're going to continue to go up, there's no one going to be forced to buy the stock as well. So you need to remember that's a major way stocks go up as well. Watch the velocity of the unwind in high beta tech. When 30-year records for crowding are broken, the reversal rarely happens in a straight, polite line. Tactical patience is your friend here. Yeah, it's not just we've read the story. Tomorrow we're going to crash, and that's it. Congratulations. It's a bit more difficult than that. It will be down. It will be up. It will play with your emotions. You will think you've caught the bottom. Then you'll crash to another 20%. You'll think you've caught the bottom. You'll go up 20%. You won't sell. It will go lower. You've sold because you think the market's going to crash, and then the market goes up another 20%. It will play with your feelings. The market is designed to get rid of the shorters and the long positions. So please be careful. Please have a structured approach to this. Please have a backup plan. Please have an idea of where you're going to buy, an idea where you're going to sell, and make sure you're prepared for the upside and the downside, because you can't predict the market. The Fed flips on crypto. Okay, so we've got the Japanese story. We're going to have a full deep dive of the Japanese carry trade, Bank of Japan interest rate. We're going to have special coverage on the channel later. We're going to have the special newsletter on it as well. But just a little glimpse into it. We've got Japan savers ditch the mattress for bonds. Let me just check the time. Yeah, that's right. Just want to make sure we don't miss CPI. That's in 6 minutes. So just a quick idea of Japan savers ditch the mattress for bonds. Why are they doing this? Well, their bonds are going up. That's the whole issue of everything. Japanese households are finally moving their cash. They've been doing it in a big way. Sales of retail Japanese government bonds hit 5.28 trillion yen. That's about $32 billion in 2025, the highest level since 2007. The surge comes as the Bank of Japan winds down its era of ultra-low rates, pushing yields to levels unseen in nearly 2 decades. We're at the highest price in 20 years for yields. Literally just there. I mean, maybe 0.1% away from the highest price, but at the same levels we were at 20 years ago. So yeah, the Bank of Japan winds down its era of ultra-low rates. Specifically, the 5-year fixed JGP coupon reached 1.35%, while the 10-year floating rate bond drew in 1.9 trillion. These numbers suggest a massive shift in behavior for the population that's historically parked over half its assets in stagnant bank deposits. This isn't just about a few basis points. When you compare 1.35% bond yield to the 0.5% offered to major players like Missouri Bank on 10-year deposits, the math for retail investors becomes hard to ignore. For years, the Bank of Japan suppressed yields so aggressively that bonds were an afterthought for individuals. Now, with yields on 5-year notes climbing past 1%, these government-backed securities are siphoning liquidity away from traditional saving accounts. It signals that domestic savers are finally convinced that the era of free money is over and looking for safety without sacrificing every bit of return. Watch for a stronger yen if this domestic repatriation continues. If Japanese savers find enough yield at home, the carry trade pressure that historically weakened the currency could continue to fade. This is a part of the story, an important part of the story. They don't need to go and look for the dollar anymore. They can be back in their country. They can take the money away from the US. They can take the money away from US dollars, bonds, put it into their own bonds. And that could be part of the problem. Again, another part of the problem is just every other person in the world who could have borrowed Japanese money for 0% and bought US bonds, US stocks, crypto, that will have to unwind and pay back. So that's the whole thing we're covering later. This is a part of the story. We're going to break it down to you. Please make sure you've got the newsletter, whether it's the 3 or the monthly or the yearly. The monthly or the yearly is where you get the full Japanese special report before the interest rate hike happens today. You get all of this alongside it, full access to the daily newsletter, the top stock movers every single day. You get a completely free ad-free experience. You get all my thoughts and everything. You get a chart every single day. In the report later today, you're going to get 5 charts ahead of the Bank of Japan interest rate decision. You're going to get event cheat sheets. You're getting one today. It's more information based compared to our FOMC ones, but you're going to get that as well. You get the deep dive research. You get XRP's weekly newsletter. You get one-on-one DM access with me. You can be messaging me up until the event. You can message me after the event. You can message me anytime, one-on-one. You get the budget and debt plan, and that's going to be released January the 1st. You've got the Portfolio Insights app that's coming in 2026, and the chart training course that's also going to be released in January the 1st, 2026. So all of that's coming to you 25% off today. Go and check it out. The link is in the live chat. Here we go. We're going to go over to our special report of CPI. If you have just tuned in, it takes 1 second. Hit that like button. Please do subscribe. Here we go. Let me reiterate what we're looking for today, where we're going to get the numbers, and when it's coming out. In 2 minutes and 54 seconds, we're going to get CPI data. CPI data is very important. Why is it so important? Because the only reason interest rates ever went up in the first place was because inflation was horrendous. The way that we're going to get interest rates to come down, there's a two-prong approach. Unemployment needs to go up slightly and interest rates needs to come down. If we get both of those things happen, the Fed can cut rates. Some people say it doesn't matter, Jerome Powell's out the door, we're going to get rate cuts anyway. That's not the case. That's only one vote from the new governor coming in. So next year, right now, we're expecting only one rate cut, or that's what the FOMC projections from suggested. Only one more rate cut. As market participants, we want more rate cuts. Why? Because more liquidity gets injected into the market, and essentially the stock market should rally. What we're getting today is CPI. The most important number we're going to get today in 2 minutes' time is the CPI core, excluding food and energy. And also we're going to get CPI including food and energy. Including food and energy, we're looking at 3.1% as a consensus. Excluding food and energy, the core amount, we're looking at 3%. The lower that number is, if you're going to take away one thing before this comes out, the lower that number is, the better. We get 2.8%, great, the market will rally. If we get higher than that number, that's a problem because they won't look to cut rates because they don't need to cut rates. We're also getting a small amount of jobs data. We're getting 225,000 initial jobless claims is the consensus. The higher that is, the better that is for rate cuts, not for the economy, but remember the economy isn't the stock market. So if we get 300,000, the perfect storm today will be 300,000 initial jobless claims, CPI at 2.8%, perfect market rally. Worst case scenario will be 3.3% inflation, 100,000 jobless claims. Bad, stock market will crash. So that's what we're playing with today. Again, not financial advice. Little bits of details can change it from how it first seems. But those are the numbers we're looking for. 1 minute away. Thank you for tuning in. Hit that like button. Do subscribe. Grab that newsletter. 25% off. The main event is later today with the Bank of Japan. Let's go into CPI. Good luck to you all. Good luck with your trades. We're looking for a low CPI. The consensus is 3 and 3.1%. The lower it is, the better. Initial jobless claims is a secondary bit of data we look at. The higher that is, the better it is for rate cuts. So here we go, over to our special coverage from Bloomberg. We are now seconds away. What I'm going to do is, as always, put this on 2x speed. Make sure you're live up to date because this is going to come from Bloomberg. Let's go to our special report. Bloomberg will bring this out. We're also going to look at it on the screen. This is refreshing. Let's go over to breaking news.
25 seconds away from that
Here
key
we go.
economic data.
Good luck, everyone. Hit the like button.
Nonetheless, better late than never. What we are seeing in markets is a positive lift. This expectation, maybe we can restart this rally up about 0.5%.
Okay, initial jobless claims is as expected.
Decidedly lower after the ECB.
Oh my God, inflation is down. Inflation's at
2.6%.
Inflation's at 2.6%. That's good.
Coming out of the United States.
Oh my God.
Now let's head over to Bloomberg's Michael McKee.
Let's listen in.
Numbers, Mike.
Well, better late than never is a good way to put it, Lisa, because the news is pretty good on a 2-month basis. Remember, we didn't get October CPI, and we're not going to get much out of that. 2.7% for the year-over-year move in CPI. That is down from 3% in September, the last release we got. The core CPI on a year-over-year basis falls from 3% to
we are surging in the market.
So good news on inflation. Meanwhile, good news on the job front with initial jobless
claims. Don't get too excited, though.
224,000.
Let's digest it.
And 37,000 revised the week prior. On a continuing basis, claims are at 1,897,000. That's up from 1,830,000. And finally, we've got the Philadelphia Fed numbers coming out now. The business outlook falls to negative 10.2 from negative 1.7. The prices paid index falls, though, to 43.6 from 56.1. Employment at 12.9 versus 6.0. So pretty much all of these numbers are better in terms of their trend. We'll break down what the CPI numbers are telling us while you break down what the
we're going to break down the individual sectors. Right now, great news.
We'll get back to you in just a second. Right now, this is a collective scream of joy in Wall Street because what you're looking at are yields substantially lower across the board on 2s, 10s, and 30s. And you're seeing equities with a lift. This is giving the green light to the Federal Reserve to cut interest rates. You can see that rally building at the front end now, down more than 3 basis points. points. In the equity front, take a look at that rally, turbocharged, particularly for the Russell 2000. It had been up about, less than 1/3%. Now we're looking at more than a 1%
I'm going to give you my thoughts on this in a second. Stay with me.
S&P futures up by 0.6%. When you bleed this through the currency space, we did just get an ECB on hold. We are going to likely get a Fed that potentially could be.
Okay, this is great. Why is this great? We've got inflation down at 2.6%. We were expecting 3%, 3.1%. That is incredible. I told you literally seconds before Bloomberg even told you about it. Markets are rallying right now. We were expecting 3% and 3.1%. We got 2.7% and 2.6%. Jobless claims was as expected, so we look at that number. What's that number? That number is CPI. CPI down means we're trending towards 2%, the best number we've got in a while. That allows the Fed to cut rates. We're expecting one rate cut next year. Now we can expect a lot more. Also, what I want to tell you before we come back to when they break down the numbers part by part, later today we've got Bank of Japan increasing interest rates. Why is that bad? Well, we've got trillions, hundreds of billions in carry trades. That can cause the markets to come down. That can be affecting the crypto market, stock market. If we do get guidance that the Bank of Japan could be raising rates up to 2%, 2.5%, the whole thing can unwind and we can have a crash across the whole board. Double that up with the AI super spending that's not generating profits and the S&P 500 being at the highest PE ratio potentially ever seen, we have a major problem on our hands if Bank of Japan raise rates. So what have I done for you guys? Well, part of the newsletter I am dedicating to a Bank of Japan it's cheat sheet. So everything you need to know about the situation. If you don't understand it, you will understand it. If you don't know about the charts, I'm going to give you 5 specific charts to look out for. I'm going to give you all my thoughts with it. And that's just part of the premium newsletter. Daily newsletter every single day. Become a more have another tool in your toolbox. One of the most important tools is understanding the news. There's no fake news. There's no ads. You can direct message me. There's a training course. There's a budget planner, debt planner. There's going to be a portfolio insights apps. There's deep dives written by experts. You get the weekly XRP newsletter. All of that for 25% off right now. Let's get back to Bloomberg. If you haven't got the newsletter, it's 25% off right now. Go and grab it. There's a monthly plan, yearly plan, today only for the Japan carry trade.
Fed and potentially how much of a constraint this is or isn't on them cutting further.
Well, obviously good news for consumers, and that's important. I think that we were already anticipating a possible cut in January, once the employment numbers come in early January and we have some clarity, which we didn't necessarily get with the employment numbers due to the shutdown, due to the blip. Over the last couple months. So I think this would certainly support that theory a little bit more when folks are thinking, well, how many?
Yeah, we were expecting rate cuts, but only one. One was expected for 2026. This pushes that up. If we look at the Fed watch tool, when that refreshes, probably in a couple hours' time, we will be expecting a higher chance of rate cut in January and certainly a higher chance than 26%. And in March, a higher chance as well that we'll be at a lower rate. So that's all because of today's CPI numbers. We didn't get last month's. It's a shock towards the downside. That's great for the markets, but just be careful. Bank of Japan is coming out tonight. Someone's asked, what are the odds that Japan won't hike rates tonight? 10%. There's a 10% chance. Oh, wait, actually only a 5%. 5% chance they won't cut rates, and there's a 5% chance that they will hike rates by 0.5%. What we're looking for is the guidance going forward, because if they're going to keep increasing those interest rates in Japan, that's historically been at 0%, we're going to have a real situation here in the US with the carry trade. Everyone's borrowed money at 0%, bought into the markets. They're going to have to buy back the yen and repay those debts soon enough, especially if we get indication it's going to go higher. So that's the real problem, and that's what's going to be explored in the newsletter tonight. But yeah, inflation down to a record drop than expected with the forecast. So let's listen in. Let's see if we've got the special report. I'm not too interested in what this lady has to say right now. I'm more interested when the guy comes back and he's broken it all down. Let's look at the markets for a second. XRP is now up 2.8%. Bitcoin had a massive surge waiting to digest it. The S&P 500 jumped 0.5% base of that, but this is muted. This is a muted reaction. You would expect the market to really be rallying on this. I mean, it's 0.4% lower than expected, or 0.3% lower than expected. That means the Fed can cut rates. That means we have a higher chance than just one rate cut now. but it's not rallying. Why? Well, everyone's waiting for Bank of Japan tonight. Everyone's worried about AI spending. We are in a situation where even rate cuts might not be able to save this market. We're going to be exploring that later tonight as well with the Bank of Japan. But stay with me. If you have just tuned in, hit the like button. I ask you to subscribe and hit that bell icon. At least be notified of the event that's happening tonight and then decide to watch or not. But please hit that subscription. Please hit the like button. Let's see if they have broken down the numbers. When they break down the numbers, we'll have a secondary reaction in the markets.
Jobless claims. How much can the Fed cut if we don't see any kind of pickup in layoffs or real weakness accelerate?
Well, I think that's a great question. So we don't have great data for the last couple months. We also saw that a lot of the data that we saw most recently was due to the government shutdown and due to folks in the government workforce perhaps exiting at the end of that federal year at September 30th. Where we see growth is in healthcare and in some other industries. So I think it will be really important to sort of look underneath the job numbers to see, if we're peaking at 4.6, what's growing, what's not growing, and then that will be able to tell us more about how next year is going to be.
Erin McLaughlin of the Conference Board, thank you so much for being with us. Really appreciate it. Brent Schutte of Northwestern Mutual Wealth Management joining us now. Brent, what's your first reaction to the CPI print? How much does it color
Here we go. Let's see what they say
next
now.
year and the backdrop for the Fed?
Surprise shock towards the downside.
I think it certainly helps the parts of the market that you mentioned before, small caps that have been harmed by higher rates. And so if you think about the economy the past few years, it has certainly been bifurcated, as has the market. It's been narrow, both in the economy and the markets, where you've had the heavy lifting done by a few stocks tied to higher income consumers and the AI theme. And I think as you look at 2026, we do see broadening, where you see small caps doing better, where you see the
Here we go,
average
second
S&P
run
stock
up
doing
now.
better. I think it's a risk management tool, but it's also in 2026 a return enhancement tool. And so that's my first thought. My second thought is what's happening underneath in the economy when you see inflation pull back this much. How weak is actually demand? And you mentioned the labor market, which I think people are giving coast all clear because of non-farm payrolls being around 60,000, which I remind you, they were overstated by 70,000 in the data going through to March of this year. And the Federal Reserve Chair Powell mentioned he still thinks they're being overstated by 60K. So they are right around zero. And that's where I think there's some risks still that are out there.
Do you think that the market response, that if this gives the Fed the green light to cut rates, then that's positive for equities, is correct? Or do you think that it's coming more from the labor market weakness that you were just referencing?
I think it's positive for a broader set of equities. And that's where I think I come back to no one knows exactly what's going to happen in the next 6 months. I think forecasting is always difficult, but there certainly is this odd kind of mix of policy that is out there. And I think you can see that through the Federal Reserve eyes, where if you had all 19 voters voting, it would have been 12-7. And you see those dissents. And that's where I just think it's hard to figure out what's going on in the near term. But if I think about the long term, I do want to pay attention to valuation. And that's where I go back to those areas of the market that people have largely ignored. They haven't done as well because of the impact of higher rates. I think pushing forward in 2026, you have valuation with you, and you have potentially the impact of rising earnings in those parts of the market for the first time in a few years.
Brent, let's have some fun here with counterfactuals. You've opened the door, so I'm going to drive my truck right through it. I'm very curious if we'd gotten
New
these data
poll in
before
the
the last
chat.
Fed
Let's
meeting,
listen
how
a
that
little bit further.
conversation in the Eccles building would have been different, if at all. I mean, we talked a lot about this being an insurance cut. There were certainly a lot of questions about whether the Fed should move then or wait till January. Do the data that we've got today give you any sense that it would have the outcome would have been different last week had Fed officials gotten them?
Potentially, but I don't think people's concerns about inflation longer term are going away. This could be certainly tied to the government shutdown with inflation coming down. It could certainly be tied to the labor market weakening. Look, I think inflation is a longer term phenomenon. We have not yet returned to 2%. The Fed's dot plot doesn't show it returning till 2028, which is 7 years since. And this is where I think there's concerns about what happens next year when the stimulus gets layered on, what happens next year when we get a new Federal Reserve chairman, and what happens longer term to help pay back some of that debt.
I don't know why they're being so bearish about it all. Look, CPI was really great, really great. I mean, you can't really skew the figures that much to bring CPI and turn this into a negative story. Isolated within itself, CPI today, brilliant, great. We were expecting 3%. What did we get? 2.6%. I mean, that's incredible. Yeah, we were expecting 3%. We got 2. When was the last time we had a deviation of -5 or -8.16? I mean, this is This is big. This is really big. Inflation is down. We're only 0.6% away from the target. And if you look at what the Fed's been saying, we're expecting about tariffs itself, which again we're expecting to be a one-time blow to inflation, to be around 0.6%. So you take tariffs out of this, the Fed have just managed to get inflation back to their target. Their target's 2%. And if you take tariffs out of it, 0.6%, that's what Jerome Powell's previously said he would expect it to be. We're at 2%. Inflation's back to 2%. People are not going to feel it though. Everyone's always going to say prices are higher. Prices aren't coming down. Don't make that mistake. We're still going up in prices. We're never going to go back to 2019 prices in the supermarket. You need to get used to these new prices that you're seeing in the supermarket and for goods. But the rate that they're increasing has gone back down to a normal rate of about 2%. If you take tariffs out of it, it's 2%. If you include tariffs into it, we're looking at 2.6%. That's core. And even without core, you're looking at 2.7%. So this is a major win for the Fed. Now, are we going to tick back up next month? Does it leave more room for... Maybe, but we look at the data we have in front of us, and right now it's 2.6% CPI. That's a shock towards the downside. The markets are rallying. I'd expect the markets to take a second leg up now. You look at this, they are taking a second leg up now. Let me show you the markets. We're looking at silver possibly hitting all-time highs again today. We've got gold now moving up, but more importantly, look at this. Bitcoin now up 2.72%. XRP now up 2.8%. Ethereum up 3%. The S&P 500 flipped from being negative this morning to nearly up 1%. I told you, if we get a figure like this, if we had initial jobless claims up a little bit more as well, I was expecting maybe a 2% down the S&P 500. But with just inflation down 0.3%, I would expect to at least be up 1% by the end of the day. So this is looking good. But don't get too happy. We've got Bank of Japan later on today. In about 10 hours time, or maybe 9 hours time, we're going to have our special edition of the Bank of Japan show. Don't forget about Bank of Japan. Let me see if I can bring you the story on Bank of Japan. We're building together a I don't know if anyone's taken advantage of 25%. If you haven't taken advantage of, let me see how many people have signed up for the newsletter. 66% of you have not signed up for the newsletter. It is super duper easy, and there's 25% off right now, and there's a free plan. Look in the live chat right now. 25%. You click on the link, you put in your email, you can take the 25% on the monthly plan. On the annual plan, that's all stays for 12 months. You'll have that price. There's also a free plan. Go and grab the newsletter ahead of our coverage of Bank of Japan, because there's going to be a special edition in that. Let me see if I can just give you a quick synopsis of what we're expecting tonight. I sent something out to the free subscribers today to tell them a little bit about it so that they can upgrade if they want to the special edition. So let me see if I can bring that newsletter on the screen. It's very windy here in the UK, so I apologize if you can hear any of that. Let me copy that link and bring it here. I'm going to answer all your questions, but the market is still going up. We're going to go back to Bloomberg's coverage in just a second. We have just covered CPI data. It was a shock towards the downside, which is great for cuts. Let me go over here. You might have noticed today that there's no... So this is all for the free members that didn't get today's newsletter. Nothing came to your newsletter today because today's newsletter is for premium members only. Remember, you get the daily newsletter as part of the subscription. But we're adding a major bonus. Premium members will also be receiving a secondary newsletter in the form of a cheat sheet ahead of Bank of Japan decision. It's a tactical guide with all you need to navigate the volatility in real time. To gain instant access, you can unlock with a 25% discount. I'll give you that link in the live chat. So what is actually happening today? Japan's debt loop collides with the Bank of Japan today. So a quick synopsis of today and what's happening with Bank of Japan is tonight. Bank of Japan decision is more than just a rate tweak. It's not just a typical rate hike. It's a high stakes collision between a 135 billion government stimulus package and a desperate move to hike rates to 0.75%. Historically, Japan's rate have been zero, if not negative. Now they've been 0.25%, crashed the market, 0.5%, brought the market down. Now 0.75%. How much higher are we going to go? That's the key question. Japan is currently trapped in a precarious feedback loop. Sorry, I've got literally a fly up my nose, I think. I apologize. Japan is currently trapped in a precarious feedback loop. Aggressive government spending drives the yen lower, forcing the Bank of Japan to hike rates. So they're sort of working against each other right now. However, those hikes explode the interest cost on national debt. That's a staggering 263% of GDP. US is about 120, 130%. Japan is 263%. By raising rates, they're hurting themselves, but they have to because their currency is so weak. They have to do this. So, with 500 billion in yen carry trade still active and unliquidated, any hawkish surprise in this thin holiday market could trigger a violent, automated margin call cascade, forcing global fire sale of US tech and cryptocurrencies to cover yen-denominated debts. This is major. We saw it unwind in 2023. 2023, 2024? We saw a small unwind when we had the surprise uptick. 13-14% down on the Japanese markets in a day. Stock market was down 10%. I mean, it was awful. And that was only a tiny amount of it. We've still got hundreds of billions ready to be unwound. And today could be the start of that. So you really need to understand what this is, how to be positioned for it, what charts I'm looking at, so that when it happens tonight, when we get that hike, you know exactly what to expect. And even if we don't have a reaction there and then, this is something that's unwinding. This isn't something to be ignored. This is something to understand. The newsletter allows you to understand exactly what market you're invested in and the risks and the opportunities in that market. If you're only listening to X News, only listening to random YouTubers, you're getting the wrong information. You're getting bad information. You want to trade on good information. Our information is fact-checked. It takes about 5 hours every single day to put together the daily newsletter. It takes 7 hours plus to put together these cheat sheets. You're going to have the technical analysis trading course, not so that you can become rich overnight by day trading, but to put that towards your fundamental knowledge on stocks. You're going to have the portfolio access. I'm going to be researching companies every single week, and I'm going to be reporting back on you in the newsletter. You get all of that and today's special coverage for 25% off. I'm going to go over to your the rate. Someone's just said in the chat the rate hike is already priced in. The rate hike is slightly, but there's also fundamentals which I'm going to be breaking down in the newsletter of why it might not be priced in. But also, what's definitely not priced in is how far are they going to go with these rate hikes. If they mention anything higher than the market expects, then we can still have a terrible day tomorrow, even with this amazing CPI news. So please be careful. I'm not calling for a crash. I'm not calling for a pump. I'm calling for you to become more educated in your trades. There's the 25% off link. Let me go over to your questions. If you have questions, please leave them in the chat. Let's just go over to the markets quickly, see what's going on. The S&P 500 is holding up 0.73%. Ethereum is breaking out now. XRP breaking out. We can get a big day on the cryptocurrency markets here. We can have major liquidations. Everyone's been short lately on the crypto market. We can have XRP back at $2 by the end of the day. Potentially, again, not financial advice. Bitcoin back above 90,000 by the end of the day. Can very much be there. The S&P 500 might have just peaked, but I don't think so. I think this will turn around. It's really good information. It's just what do people think about Bank of Japan? Gold continuing to move up, now up on the day. Silver now up on the day. Let's go back to Bloomberg. Let's see if they've digested it any further. Let's go live.
Recommitting to a particular rate path.
We're going over to the ECB.
The decisions taken today
ECB
are set out in a
live
press release
from Frankfurt.
that is available on our website. I will now outline in more details how we see the economy and inflation developing, and will then explain our assessment of financial monetary conditions. Looking at the economic activity, the economy has been resilient. It grew by 0.3% in the third quarter, mainly reflecting stronger consumption and investment. Exports also increased, with a significant contribution from chemicals. The sectoral composition of growth was dominated.
Okay, that's the ECB. We're not too worried about the ECB right now in the euro. We have just got news come in. Let me bring that news to you. The ECB is holding rates. Okay, Bank of England cut rates this morning. That's what was expected. Very close though, 5 to 4. The ECB is inflation's at 2. What was it? Inflation's at. Let me just go back a second. Inflation's at 1.9%. Oh no, in 2026 they see inflation at 1.9%. That's where they see it going. Right now it's at 2.1%. So they're at their target really, because they don't have the tariffs. It really lines up. America tariffs obviously affects Americans, not other. It affects all countries, but affects the consumer in America. That's brought up inflation by 0.6%. If you take that out of the numbers we got today, we are also in the US. I say we, I'm not from the US, but you are also in the US at 2% inflation as well. So you are at your target. That's what really is great to see today. We didn't get an uptick. We actually got a surprise downward shift. Let me go over to your comments ahead of Bank of Japan now. So let me change this over here. Oh, what did I just do? I didn't mean to do that. Let me just change this over here, and then I'm going to leave me your comments now, and I'll be answering them. Plus Bank of Japan, XRP, Q&A. Let me just put that there so everyone knows what we're doing. That's when they come in. Oh. CPI shock and Bank of Japan, XRP Q&A. Okay, let's go into the live chat. How many people? We've got 247 votes. 65% of people don't have the newsletter. I don't understand. Why would you not have the newsletter? There's a free version as well. I can understand some budget constraints for people. 25% off. One of the best tools out there. But there's also a free plan. I mean, why don't you just sign up to the free plan? Let me just, I can't go to the very top. So what I'm going to do is I'm going to go from here. If you want to start, if I don't cover your comment, I apologize. So many comments have come through throughout the show. Repeat your comment and I'll answer it. Didn't the Japan issue already be added to the market price a couple weeks ago? Didn't the Japan issue already be added? No, we don't know. We're expecting a rate hike. We've been expecting a rate hike since the last meeting with Bank of Japan. No shock has been added to the market yet. What can happen is they raise rates, which we're expecting them to do. Let's say we expect there's a 90% chance they just raise rates 0.25%. Let's say they do that to 0.75%. The underlying mechanics can give way. Bots, algorithms that can give way. But what's more important is where do they expect their final goal to be on interest rates? If that's higher than, let's say, 2%, then we expect all of those 500 billion trades to unwind, causing cascading liquidations within the market. That's one part. Then the second part of that would be, wait, you've got massive amount of leverage in the US markets as well, in the cryptocurrency markets as well. If that unwinds, this unwinds. And then you look at AI companies, are they making money? What's the PE ratio on the S&P 500? That will cause cascading sell. So you have a few things that can really ignite together, and each can be sort of gas on the fire for each of them. Let's see. Spartial, yeah, that was what Spartan Wolf said. Songs for Space says, I just dumped in thousands. Good luck to you, Songs for Space. Good luck to you. I went long at 182 on XRP. Take profit is close. Then I'm out. Good luck. Good. Well, that was probably before the CPI. I mean, what's XRP at now? Let me see if I can put it on the screen for a second. Is that working? No, it's not working for some reason. Why does that not work? What's XRP? I'll just tell you. XRP is at 191 now. Take profit is close. Soul Glow says, I don't know what is going to happen. It can't go either up, down, or sideways. It can go either up, down, or sideways. Yes. I mean, if anyone tells you anything different, then it can go up, down, or sideways. That's when the problem is. No one can predict the markets. You just need to be prepared for each part of the markets. If you're listening to a YouTuber that just says, we're going to go to 1 million, we're going to go to the moon, we're going to go to $100, there's a serious problem. It might sound good, it might make you feel happy, but it's not good for you, and you're not going to make money that way. If you listen to someone who just says, we're going to go down all the time, sell everything, get out the market, it's not going to be good for you, because what if it goes up and you're out the markets, or they're just trying to sell videos, or if someone just says, we're going to stagnate forever, you're never going to make any money. Well, what's the point of listening to that either? What you need to do is be prepared for it to go up, down, or sideways, but have the information so you make the best decision based off all of them. Josh Monroe has just gifted 5 memberships. Look at this. Why is it not playing? I can't hear it. Here we go. Josh Monroe has gifted 5 bronze memberships. Claim those free memberships. There's 800 people watching. What do? You hit the like button, you subscribe, and you comment in the live chat and see if those memberships come your way.
I can't believe this.
Can't believe it. Look at it. We've got members flying in now. So please do thank Josh Monroe for that. That's incredible. How do we feel about gold? I feel good about gold. Come on, 192 on XRP. Let's go. I need that take profit to hit. Oh, 192. We hit that 192. We did hit that 192. Did your limit order get filled though? That's the question. That's who said that? That was Ruiz Family Finance. I can't believe this. Walker Wonder Sales, help the fly. How do we feel about gold? Says Azar Williams. I feel good about it. Dan says, SoFi stablecoins release. You have any other news on that, Sensei? Not at the moment. No, I don't. Daddy Pascal says 89,000 Bitcoin. Yes, we did hit 89,000. Are we going to break 90,000? I can't believe this. Can't believe it. Look at that. Please do thank Josh Monroe for your membership. DJ Haynes is here, and he says, today is all about scalp trading, then getting out of the market before it closes. Good luck, DJ Haynes. I love it. Ruse Family Finance says, so not everyone is out, and most people are still holding until last minute. It's the end of the quarter, and they need to show investors that their books look good. I can't believe this. Thank you for that. Revved Up Biker says 80% of Japanese banks have integrated to the XRPL into the bank infrastructure. At least 805 banks are using XRP. Ooh, I would be careful about saying people are using XRP. Again, I can't verify that story about 80% of banks. I know Japan is one of the countries that uses the XRP technology the best. However, I wouldn't say that just because they're using XRPL, they're using XRP. And secondly, I don't know about that 805 figure. I'll see if I can do some more research for you. We are so back. Everything going up and to the right, says Rob Brennan. We love it. Revved Up Biker says UK dropped interest rates by 0.25%. Yes, they did. That was one of our stories today. Martin has just popped in. What's he said? Martin has just said, my trades made all profits last few weeks live on the show to compensate for whatever happens next. Bought back the VU before the report today. 200,000. Bought Coca-Cola on the dip now. Rest in SCUF. Look at that. There we go. Martin is back in the market. Essentially what he's done, he's made enough money to cover some losses. Of course, if we get a 20, 30, 40% correction from a carry trade, everyone's going to be losing out. However, if we just get a normal reaction, Martin is prepared for it. This is exactly why he's done his trades. My trades made all. Let me read it again because this is important. If you've been following what Martin's been doing, not following by the trades he's doing, but following what he's been saying, he's been making all these profits: $1,000 today, $2,000 yesterday, $3,000 the day before, $4,000 trades, all small profits. I mean, it's not small, but it's big amounts of money creating small profits. That amount of money that he's created, essentially what he's saying is, I'm investing in the markets now before the report, took advantage of the inflation report there. Even if we go down to a certain extent, of course, he will still be in the money. And even if he's not, there's SGov, there's margin, he can buy in. Martin made his moves before the rate and decision. He's essentially made enough money to compensate for any losses. I'm just getting some information coming through. Yeah, exactly. Okay. That we are going to continue with the comments now. Thank you, Martin, for keeping us updated and sharing all your trades. It's been let me go over here. Let me continue to read some comments. Martin has also just said, I will use tax lot sellings today to take from the top. So Martin might sell from the top using tax lots. He also said, I made $14,000 on Coca-Cola. Congratulations to Martin. Why does she look like Jerome Powell, says Robin. I don't think why does she look like Jerome Powell? I'm not sure. If you have just tuned in, please do hit the like button and do subscribe. Do take advantage of the 25% offer currently on the newsletter ahead of the Bank of Japan cheat sheet coming out ahead of the Bank of Japan's interest rate hikes to get you prepared for that. I have some dry powder waiting for the hike from Japan, says Mikey. Going to get as much XRP as I can afford when we get the 30% dip. Look, please be careful. You say when we get the 30% dip. Who knows? Are we going to get a 30% dip? Personally, do I think we're going to get a 30% dip from where we are right now on XR? If in a bear market, yes. Based off this carry trade on Friday, I don't think so, because I think most of it is priced in. I wouldn't say we're due for a 30% correction. Look, there's a few extremes. There's one that's the market's going to go up to $100, $1,000 based off the XRP carry trade. There's some people that saying that XRP is going to go to 0 and 50 cents based off the XRP carry trade. I'm somewhere in between. I'm not saying we're going to go to $100. I'm also not saying we're going to crash 50%. If certain things happen during the carry trade, I'm more likely to be on the side that we're going to crash 50%. And also that's more realistic than even suggesting $100 or $1,000. But we will do some more analysis later on today. It's hard to say that XRP is going to go down 30, 50% tomorrow. At least it can do, but please don't think it's a guarantee. XRP now just broke 192, so I hope that person who's looking for take profits is through again. What else do we have? 6 months from now, everyone will wish they got into this upcoming crash. If I had to choose, are we going to crash or are we going to pump? I would say crash. That's why I'm probably more on the sidelines than I should be. And why do I say than I should be? Because most successful investors just buy the dips, and they make the most amount of money historically, anyway. High energy investment says that's great for XRP theoretically. Ruiz Family Finance says, "Yep, I'm pure liquid right now." Evan says, "Where do you suggest holding my XRP at? Currently in Webull and Kraken." I don't give advice. The safest place theoretically is a ledger. Keeping your seed phrase to yourself, not clicking on any phishing links on your emails or stuff. But in reality, it's an ETF because even though you have to pay maybe 0.25%, in reality, no one can really come in and hack it. It's saved by custodians. So that's what I would say. But in terms of exchanges, Webull, I don't really have too much trust in. Kraken is one of the oldest ones, but it's all about those phishing links rather than where you're holding it. You have to be safer with your passwords, two-factor authentication where you're holding it. Ledger is obviously safer than that, but then it comes with its own risk. Are you going to send it to the right wallet? ETFs, in my opinion, especially if in an area where you can buy ETFs, are pretty much probably the safest way in practice. Pac says, "Do you think XRP's price is already priced in?" Yeah, for what we've got in right now, if I had to say an answer, I would say yes. For now, yes. This is another COVID opportunity to buy. Best newsletter out there, Josh Monroe. Thank you so much. Another way is a Blue Owl closed their credit stream to Oracle yesterday. Thank you. Another worry is Blue Owl closed their credit stream to Oracle yesterday. Oh, thanks, DJ Haynes. Yeah, that is another worry. So much debt out there for AI growth. I mean, it's incredible. Spartan Wolf says, "Got it. A little bit of Blue Owl capital drama and more Japan drama." Excuse me, can super red. A little bit of Blue Owl capital drama and more Japan drama can super red. Yeah, it can. Plus, just in general, the over leveraging the markets. Forget about the Japan over leverage. Nice CPI. Silver is king. How have we done on silver? I mean, we bought this at $25. What's it at now? All-time high 65, 67. I mean, what is $66? I mean, it's absolutely incredible. Congratulations, all silver investors. I'm already out. Took profits. Chart is bad. Shock to inflation down too much. I'm already out. Songs of face in, out. He went in, he's out. Shock to inflation down too much. Down too much. It's down too much. Songs of Space says. How can it be down? What's the implications of it being down too much? Evan says $170. DJ Arab Money says smash a thumbs up. Great information. Thank you so much. Please do hit that thumbs up button. Craig says let's go. Yes, let's go. Are you guys excited for the portfolio challenge? Martin grew his portfolio from $5,000 to, what is it now? 250, 300, 400. I mean, it's hard to keep track now. I want to do the same. I'm jealous. I want to do the same. But we're going to really integrate it in a great way. We're going to have it live on the show. We're going to have the deep dives. We're going to start from the very basics. What trading platform? what bonds? Then what stocks? Analysis on the market. It'll be great fun. Is anyone else excited for it? Let me know in the chat, yes or no. Thanks, Josh. Can't believe it. Don says thanks, Josh. Richard says can't believe it. DJ Arab Money says thanks. Can I get a membership? I think we're all out of memberships. If you do want to get a membership, if you look just over here, it's not showing very well, but just to my right there's a little money button. You can either do a super chat, gift memberships, or get a membership yourself. So you can go there and get a membership. Yes, my limit was filled on the wick. Congratulations on getting out your position. Craig Carter says, no surprise Trump let that news out last night. yeah, I need to go watch back that stream. It looked like a really popular stream, but wasn't it? Did it seem like more of a nothing burger? In the end, he really hyped up, and then not much was released. Um, no surprise, Trump let out that news last night. What was the news he let out? Let me know, Craig. Thanks, Josh to the Moon. There's Martyn again. Let me reiterate what Martyn said. He said, my trades made all the profits last few weeks live on the show to compensate for whatever happens next. Bought back a VU before the report today. 200,000. Bought Coca-Cola on the dip now. Rest in SGov. Congratulations to Martyn. Let me continue reading your questions. Let me remind everyone, if you are still watching and you want to be a successful investor, it all starts with what you digest. If you start digesting X random news, random YouTubers, that's the way you're going to trade. Willy Wally, panic buy, panic sell. You're not actually going to understand what's going on, and long term, it's not good. If you want to change that, it starts with what news you intake. That's why we started the newsletter. That's why we don't take corporate sponsorship. That's why we don't take ads. That's why no one can buy our voice. So please consider grabbing the newsletter. It's a great support, firstly. It also, I'm trying to build the best product out there. There is so many things you get part of the newsletter, and it's only going to grow. And if you buy it now, your price isn't going to increase. So you get 25% off today. Monthly plan is also included. Yearly plan included. There's a free plan if you don't want to pay and you want to decide later. But ahead of Bank of Japan, at least get the Bank of Japan report. You can buy it, cancel it if you don't like it. But really do check it out because there's so much information out there. As well. And I can't believe that 67% of people haven't signed up for the newsletter. I don't understand. There's a free version. David Hensley said, Martyn, what's up? And High Energy Investor says, Bitcoin will be 90k today. It's very close, 1,000 away. Some influencers are saying the reverse carry trade can make XRP really, really pump. Why are they saying this? They're saying that to get views. Molt Illy says, hi, Sensei. Joe Parsons says, Baldy is here. I don't know what that means. Me? Who? You? Me? What's going on? Velican Gaming says, is Bitcoin going to hit 90,000 right now? Can you tell me? I'm not a fortune teller. I mean, if I knew right now we're going to hit 90,000 on Bitcoin, I would open up a 100x trade and go all in. Is it going to hit 90,000? Let's have a quick. I mean, I don't know. I can't. No one can predict the future. Looks pretty likely that we'll get close to at least 89,800. I'll be pretty confident of. JC said that the reverse carry trade will make XRP worth 3 digits. When is everyone going to admit who's wrong? Is it tomorrow when we're not at 3 digits? I don't understand. Is it 4 months ago when he said ETFs are going to cause XRP to go to 3 digit? I don't even have time for it. I welcome everyone on this channel, even if you are a JC fan. Come on the channel. Let's watch the carry trade together tonight. I might be wrong. You might be wrong. I'm going to be right. You're going to be wrong. But let's watch it together. Martyn says, I will use lots of selling today to take from the top. Revved Up Biker says, 805 bank to a strong. Typos, 85%. Oh, right. Okay, got it.
I can't believe this.
Oh, we've got a new member on the channel.
At Calendros 1986 has become a member.
Look at that. Thank you very much for becoming a member of the channel. Lots of perks and benefits. Tune into Martyn later. Mikey does fitness. Dominoes, couple things need to line up for that to happen. Japan, oil, and stablecoins. Oh, okay. Is it now a few things need to happen for that to happen? Okay. What needs to happen then? We need to have Japan, the carry trade. We need to have oil, and we have to have stablecoins. Don't know what you mean by that. Can get me a free membership. It depends if anyone does membership gifts. Revved, you can become a member. Revved Up Biker says 80% of banks are using XRP, mentioned by NASDAQ. 80% of banks are using XRP. Revved Up Biker, can you send that in on Discord, Substack, something? 80% of banks using. Are you sure it's XRP and not XRPL? They use RippleNet's technology. Actual widespread of XRP usage for liquidity is in production, but it's not yet 80%. The 80% figure is largely tied to Japan Bank Consortium, a group of over 60 Japanese banks representing most of the banking assets, exploring or using Ripple technology for fast cheap. Yeah, please don't get confused with Ripple's technologies, Ripple's net, XRPL with actual XRP usage. I strongly believe that number's wrong, but I haven't looked into it. Henrik says, are you all out of cola? I think Martin's back into Coca-Cola, no? I think Martin's back into Coca-Cola. Songs to Space says everything changes on market open. We'll see what happens at market open. People can be taking profits. Remember, CPI is great, but underlying issues are not good. I mean, we've just talked about the Bank of Japan. We've just talked about the unwind. We've just talked about AI companies. We've just talked about financing. We've just talked about the leverage. I mean, that's all bad news. At what point does the market wake up to that? I'm not sure. Is it when there's good news in the market? Maybe. Good afternoon, all, says Henrik. Stephen Lindowski's here. Lance Strength says, sup, everyone. Shep says, just be prepared. No one knows. Yeah, exactly. Finance Family says, I agree. I agree. I bet people in Wall Street are waiting for exit liquidity. I need to end the show. I've just realized I'm super late. I need to take my dog to the groomers. And that was booked in, so I have to go do that. I wish I could stay on longer. I need to be there in 15 minutes. So what am I doing live? What am I doing live? I need to end the show. I'm going short. Silver after Japan, says Manus. I can't predict the future. Christian says, when I'm searching for your videos, that was impossible to find. I type in Crypto Sensei and some other dude comes up. What do I do to find your videos? Christian, yes, there was a random dude called Crypto Sensei, and I don't like him because all he does is talk nonsense. So I changed my name. Anyway, you can refer to me as Sensei, just in general. But on YouTube, if you type in Martyn Lucas Investor Sensei, then it might pop up. But also, there's a playlist on Martin's channel, Sensei, the Oracle Street of Investing, or Sensei Finance and Stock News on this channel. Then you can find all of it. Just go on this channel and you can just scroll down the videos or the live streams with my face on it. That'll be me. It's on this channel. I can predict the future. Okay, I need to go. Toto for the Clippers, for your challenge, how much we invest a month, if you feel okay to say. Jamie Reese will depend, just like Martin. If income comes in, I'll be putting it in. I don't know. It's not going to be a set figure, maybe 1,000. I don't know. Thank you, everyone, for tuning in. Until next time, take care of yourselves and each other. This will take you straightly to the Bank of Japan show. It's going to be live on this channel. This show will take you directly there. Go there, hit the like button. Make sure you put your notification bell on. And for the last time, I just want to tell you, this is your last chance to get in for the 25% discount. 25% discount on the newsletter today. Take a second after this show ends to go check it out. You get all of this. Full access to the daily newsletter every day. The daily movers and the context. Zero ads, zero distractions. Specific analysis per story. My thoughts on each story. Chart of the day every single day. Instant actionable guides with the FOMC cheat sheets, CPI cheat sheets. What you're getting today is the Bank of Japan cheat sheet. Understand exactly the mechanics of all of it. I promise you understand it. You'll come out understanding it all. You can show off to your friends about what you know and what they don't know. But more importantly, it will help your portfolio because you understand what you're walking into and how to come out profitable. That's coming out today. You get one-on-one DM access. You can message me at any point. You get the budget plan, debt plan, January the 1st. You get the chart analysis trading course. That's 8 years of knowledge in a 2-hour video. I'm not charging an arm and a leg for it. It's included in the newsletter. That's going to be January the 1st. You put that alongside the fundamental analysis. That's great. What else are you going to get? The whole portfolio challenge I'm doing, exactly my thoughts behind every trade I make, is going to be in the newsletter. Portfolio Insights app, so much research and development going into that. Your price won't increase once that comes out. Maybe maybe the newest subscribers' price will go up. But right now, 25% off. Go check it out. It's your last chance to get it off 25% off. And we've never actually done it on the monthly plan. I think it's on the monthly plan as well. So there it is. Link is in the live chat. Go and check it out. 25% off right now. Today only. XRP weekly newsletters launched as well. So until next time, while I'm gone, click on that link. It'll ask for your email. Then it'll ask if you're going to go monthly, annually, or free. Or there's lifetime access if you want to support the show. Thank you everyone for tuning in. I look forward to seeing you all later. Oh, look at this. Look at this. Just as we end. Special guest on the show.
At Robert Rose 8726 donated £1.99 through a super chat. Newsletter has already paid me back and some.
Look at that. Newsletter has already paid me back and some. So many great thoughts from the newsletter. I mean, there's a whole section on the newsletter I haven't even published yet. It's all of everyone just saying how much they love the newsletter. I need to publish that so you guys can see. But go check out the newsletter. 25% off. He's already. What did he say? He said newsletter has already paid me back and some. Thank you for being a great member of that. So yeah, 25% off right now. you might get it all paid back today with the information you get. So you can cancel all your Bloomberg, Reuters, all those subscriptions and just have this one. Until next time, take care of yourselves and each other. Martyn will be live in 2 hours about how he's trading all of this. When is Bank of Japan exactly? It's later today. It's in about 8 hours time. Until next time, take care of yourselves and each other. I really need to go. I'm super duper late. Bye-bye.